What's going on, guys? Matty Ice here. Welcome back to another episode of Investing with Matty Ice, where I share my investing journey with you guys, specifically when it comes to income ETFs. Today, I want to respond to a question that was left on one of my videos about whether or not they should start with Stretch from Strategy, ticker symbol STRC, or BTCI, my favorite income ETF right now. And I think this is a really good question to start with in the sense that it leads to asking better questions later on. But it is, at the end of the day, the wrong question to ask, because what you should be asking is which one is best for what I am trying to accomplish. Because at the end of the day, one of these two financial products aren't really competing against each other in my opinion. One is not better than another, just like a hammer is not better than a screwdriver. A car is not better than an airplane. Like if I need to go to the grocery store, should I take a car or an airplane? I'm going to take a car. All right. If I need to travel across the country, am I going to take a car or an airplane? Well, it's probably better to take the airplane, right? One is not better than another. It just comes down to what you're trying to accomplish. What do you need in your life right now? What's your financial situation? How much capital do you have available? Is this going to be a long-term investment, or is this something that you need to access later on down the road, right? What your risk tolerance is. Are you in the wealth accumulation phase of your life where you can afford to take on some more risk and you can handle more volatility long-term? Or are you in the wealth distribution phase of your life where you probably want to lower the volatility in your portfolio and focus more on that steady, consistent income, right? All these things play a role in determining which financial products are best for you. Now, of course, this is not specific financial or investment advice. I'm not a financial advisor. What I want to do in this video is just share my framework about how these different financial products work in my life to hopefully help you get some clarity in yours, all right, with regards to your financial journey. Okay, so let's get into it. All right, let's start with the core trade-offs between these two financial products, because there's pros and cons to each, and you're trading off something in order to get something else with each of these. All right, so STRC, Stretch from Strategy, is specifically designed to provide stable, consistent, high income, far greater than what you're going to get in a CD, like these traditional financial assets, like CDs, money markets, savings accounts, etc., bonds, whatever. All right. And it's specifically designed to strip away the volatility of Bitcoin. So you're not getting direct exposure to the Bitcoin price. In other words, you're sacrificing the upside potential of Bitcoin for consistent income. That's what's happening with STRC versus with BTCI. It's literally the exact opposite. You are sacrificing consistency for that upside potential that Bitcoin has. So obviously, if you're going to buy something like BTCI, then you need to believe in Bitcoin long term. In other words, with an income ETF like this, you need to believe in the long-term performance of the underlying asset. Otherwise, it doesn't make much sense, right? But BTCI is going to be much more volatile, not just in the price of the income ETF itself, but also the cash flow as well. Now, granted, even with that volatile cash flow, it's still really good. That yield stays in that 25 to 30% range. However, if you go to the NEOS website, I'll link it in the description for easy access for you guys, and you go to the distribution calendar for BTCI, the distribution amounts are kind of all over the place. One month you might get $1.50 per share in that distribution. The next month, well, maybe not the next month, it would have a massive decline, but the most recent distribution was 76 cents per share. That's a pretty significant drop. It's more than 50%. Right now, is it still high, 76 cents per share? Sure. But if you are at a stage in your life where you are relying on that income, well, that's pretty volatile, right? You might want something a little bit more consistent. So again, it just comes down to what you're trying to accomplish. But those are the main trade-offs. Just think of this, guys. If you get nothing else from this video, STRC sacrifices upside for consistent income. BTCI sacrifices consistent income for upside, right? Now, it still has really good cash flow, but it's kind of all over the place, right? So again, it just depends on what you're trying to accomplish. Now, let's get into some more specifics about who STRC is for. Then we'll go to BTCI, and then we'll wrap up with my framework on how I utilize these different, and my strategy for how I use these different financial products in my life. All right, what I want to start with actually here, I mentioned, STRC being good for people like in retirement, whatnot, want that more consistent income, lower volatility in their portfolio, but also for people that are looking for a more safe, like low volatile place to save and store capital for short to medium term future, like capital storage. Maybe they have it earmarked for future financial obligations, kind of like I do. That's specifically why I put some of my capital into STRC. We'll get to that in a minute. All right, but that's another type of person that STRC might be good for, is if you need access to that capital at some point in the future. Maybe you're saving for a down payment on a house, maybe it's a wedding, maybe it's for college or whatever, right? And you decide that after doing your own research, that STRC makes sense for you because it's the current dividend right now is 11.5%. That's absolutely insane, and it's designed to maintain that $100 par value, or between $99 and $101. It's very low volatility. But like, if you're saving money for something specific in the future, and you're going to need access to that capital at some point, well, you don't want the value of that capital fluctuating wildly like it would in something like BTCI. Right? When you need access to that capital, you need to be able to get access to it quickly and at whatever the value of that capital is at that time. You don't want to have to access the capital for that future obligation and have it be down 30% over the last 6 months. That's not good. Okay, that's not a good savings vehicle if you need access to that capital in the very near future. So that's a good way to think about it. I think this key concept here summarizes it really good. STRC is like this enhanced type of savings account alternative, right? Where you're going to get far greater yields than the traditional savings accounts without the Bitcoin volatility, right? So more consistent, reliable income, designed as a high income vehicle, minimal, if any, upside potential. It depends on what price you buy STRC at, because it does fluctuate in price sometimes, but it quickly gets back to that $100 par value or close to it because of the different mechanisms with this particular type of product. I'm going to do a separate video on that later. All right, but just know that this is meant for more consistent income and capital, so consistent income, but also if you need access to the capital later, STRC might be a good fit for you. All right. Now, who's BTCI good for? This is the way I see it anyways, is a long-term compounding vehicle. This is for somebody that does not need the cash flow right now. They're going to reinvest 100% of the distributions to get that compound effect and eventually turn that into cash flow at some point. Maybe it's taking the distributions in cash at that point, or maybe you sell off the entire BTCI position and move it into STRC to get that consistent income, because you've already had, 10, 20, 30 years of compounding with BTCI at that point. Why not turn it into and that's a large amount of capital. Can you imagine having 500,000, million bucks, or whatever it is, a few $100,000 that you're able to move into STRC at that point? That's pretty significant, right? So for me, BTCI, long-term compounding vehicle. You're going to be okay with the fluctuating cash flow because you're just going to be reinvesting the distributions anyways. You don't need that cash flow right now. You're going to be using it to acquire more shares at BTCI. So this is a much more longer term type of financial product. You're looking for asymmetric upside as well, because obviously with BTCI, we get fantastic cash flow. Even though it fluctuates, it's still really good cash flow. But we're also getting upside exposure to Bitcoin, which, again, it comes down to your long-term conviction in this particular asset. Like, if you don't believe in Bitcoin, then stay away from this stuff. But if you believe in Bitcoin long-term like I do, and you think it's going to the moon over the next 5, 10, 20 years, well, with BTCI, because they don't sell the covered calls on the entire portfolio, we're still maintaining upside potential on Bitcoin. And imagine if Bitcoin does hit 500,000 or $1 million of Bitcoin. What's that going to do to BTCI? It's going to do pretty good, guys. So we'll see. Time will tell. All right. I don't have a crystal ball, but I'm pretty confident that Bitcoin's going to do well, right? But the BTCI, much more for longer-term investors, Bitcoin believers. Capital, here's a great way to put it to finish this. Capital you do not need for a long time. That is key, guys, right? And you're just trying to maximize the amount of wealth that you can build over the long run. That would be a good fit for BTCI. Okay. And not to mention, you have to be able to handle the drawdowns as well, because it's a very volatile asset, right? You need to make sure that you're not the type of person that is going to panic sell just because BTCI is down 20, 30, 40% or whatever, right? You should see that as if you're truly a long-term investor, you should see that as a buying opportunity to acquire more shares of this asset that you wanted to own for the long term anyways. Make sense? So quick side-by-side comparison. BTCI, higher upside, higher yield as well, bigger savings long term, I'm sorry, bigger savings, bigger swings. My apologies. Much more volatile asset. Distributions are going to fluctuate. STRC, slower compounding, even though 11.5% currently is still a great number to compound with. It is going to be slower than BTCI over the long run, most likely. That's never a guarantee. I mean, BTCI, maybe Bitcoin crashes, who knows, and stays there for 20 years. Nobody knows. But anyways, it's STRC, more stable, more consistent, designed for reliability. So do you want consistency, or can you endure volatility for a higher reward later on in the future? That's, I think, a great way to put it. So here's my personal strategy, and we'll start to wrap this up. All right, so I actually own both right now. I started with BTCI in my Roth IRA. I recently just took out a loan to purchase more shares of BTCI, which I did an entire video on. I highly recommend you check that out. I go through the numbers, the strategy, the type of loan that I used for it as well. That's how bullish I am on this stuff. But I started with BTCI because that's an investment that I don't plan on touching for a very long time and plan on owning for a very long time. I don't need the cash flow from that asset right now. So I might as well get, since I have long-term conviction in Bitcoin, I understand the cover call strategy. I'm putting my money into something I know, like, and understand and have long-term conviction in. That is key. I'm not doing this just because it has a high yield. I'm doing it because of all the things that I just mentioned, but this is a long-term play for me. So long-term compounding, multi-year Bitcoin thesis, I think, is a good way to put it. It's capital that I can let ride for a very long time and not have to touch it. All right. That's very key. All right. Now, with stretch is different for me. This is something that I treat as short to medium term capital storage, right? A safe place to save and store capital for future financial obligations. So all the capital that I have in STRC right now, I can't afford to have that be exposed to massive amounts of volatility like it would be in BTCI, because I'm going to need that money for certain things at some point in the future. All right. But while I'm waiting for those future financial obligations to arise and have to take care of, I might as well earn the best yield that I can in the safest way possible. For me, I think STRC is extremely safe. Now, again, not financial investment advice, guys. Do your own research. But based on what I've seen, for me personally, I'm very comfortable holding a lot of my safe capital in STRC, earning 11.5% tax deferred right now. And at some point, I do plan on liquidating my position in STRC to meet the future financial obligations that I have. So I'm looking for low volatility, high income. I might as well put the capital to work while I'm waiting for those financial obligations. Okay. So to summarize, neither is better. They just solve different problems. Right. Start with STRC if you need income stability, if you have lower risk tolerance, if you don't want volatility in the asset that you're putting your money into. If you're going to need the capital very soon in the next, 6, 12, 24 months, whatever, and you plan on liquidating the position in STRC at some point, if volatility makes you uncomfortable and you are prone to panic selling, STRC might be a better fit. If you believe in Bitcoin long-term, you can handle the drawdowns. You see them as gifts from the market to acquire more shares at a cheaper price, and you don't need access to the money anytime soon, BTCI might be a better fit. So I hope that helps, guys. Drop some comments down below with any feedback, any additional questions as well. I love reading all of your comments, and that just gives me, more just different types of videos to make for you guys to help you along your journey. Because again, the point of this is just me. I'm sharing my journey and my framework as well, but I do hope that it helps you guys as well. So just let me know if you have any additional questions in the comment section, and I'll talk to you in the next one. To your success, Matty Ice is out.